Hey everybody, Bobby Iacchino along with Jim Iorio. We run the Traders Edge Show, which new time, 4 p.m. Eastern time, live on the Tradier Hub. Jimmy, we were doing the rundown right now. We're looking at the rundown, talking about it. And the first part of it I thought was really interesting. It talked about what markets react to, mentioned uncertainty, which is a very easy way of saying what markets react to, but talked about a couple of things I wanted to ask you about. Geopolitics, but not that one. Fed hikes, not that one, but debt overall. You have a pretty strong opinion on debt overall.
So I do, and I'm giving a speech on this in 2 weeks in Arizona for anyone who's coming there too, because my biggest concern right now is Treasury issuance. The continued profligate spending, despite the fact that the markets basically told the Treasury that they don't have the same appetite for our long duration bonds as they did in the past. Now, we're filming this on Wednesday, the 10th, and there was a 10-year auction that went off today, which was a C, which is a much upgrade from a D minus of the last couple long duration auctions that we've had. But what I think is the biggest concern for me in 2024 is that the Treasury keeps trying to sell long end debt. The market doesn't want to buy it. The Fed stops quantitative tightening, flips into quantitative easing to start buying those bonds, and that could affect the dollar adversely. And that's why I like gold, Bitcoin, silver, and things like that.
Yeah, that's something that your average investor probably wouldn't notice as it's happening, right? Because they'll announce that they're changing the quality of the assets they're buying, they're letting more expire, they're buying other things. They announce that stuff, but people pay too much attention to the rate change, don't they? Or I should say
exactly.
The
yes, but as long as we're talking about the dollar too, there's a question that I have to talk to you about too, and that is all the talk. Because I'm a dollar bear. I believe the dollar's going lower, perhaps significantly. I'm not a hyperinflation guy. I think the dollar still remains not the only game in town, but mostly the only game in town. However, people are talking about the BRICS currency. I've heard you speak about it before. Do you think that's a real threat to hegemony of the dollar?
No, I think it's essentially, it will be used. I mean, the BRICS countries are pretty powerful. It's Brazil, Russia, India, China, and what's the S for?
You're asking the wrong
remember
guy.
Right off
I mean, I know it. I have it written down somewhere.
Yeah, no, I have it written down somewhere too. I don't remember what the S for, but I mean, they've got a lot of commodities and they can transact in their own currency as long as it's backed by something. And to your point about gold, they're talking about backing it with gold. Now, if they actually get that done, it becomes a viable international currency within the BRICS nations, which could cause some ripples. But there's simply no way in the short term that the dollar can be what's the word? Exchanged for the BRICS currencies, replaced by the BRICS currency. I want to say supplanted, because everything is still priced in dollars. So whether you're transacting in dollars or not, you're settling in dollars theoretically.
Yeah. So I share the same opinion as you as well. I think that there's poor stewardship of our currency, and that's one of the reasons I'm long those things. There's one thing I would like to add to the gold versus the dollar versus the BRICS discussion. Global central banks have been stockpiling gold at rates that we haven't seen in about 75 years. To me, that's interesting. And again, it sells copy to tell people, oh, we're all going to hell. Everything, the bottom's falling out. I don't believe that's happening. But I believe if some people think that's happening, that could cause things to rally like gold. The fact that central banks are buying gold, I think, is a pretty big deal. You?
Yeah, no, I totally agree. Not only are central banks buying gold, but institutions at large have been buying physical gold for quite some time, and they don't seem to be slowing down. You know, the other thing I wanted to talk to you about real quick is at the end of the rundown, they talk about the trend being your friend and also being careful to let others think for you. Something we push in both of our shows, really, it's the theme of both of our shows is independent thought. That's why the guests we have are as open to coming on our show as we do. From a standpoint of the trend being your friend, you didn't look at that sort of 5-day downturn in the equities that we had, that 5-session downturn that ended on January 2nd as any new trend, right? Trend's still up in equities.
No, it flirted with support levels that had they broken and settled below it, I would have started thinking about a new trend, but no, it went there. I actually traded that. Okay. I took off about half of my downward hedges on those because I figured the ones I had left on would have gained tremendous delta if we just crashed through it. So I was kind of fine. So I didn't exactly make money on the trade, but I took off a lot of hedges at a good level. So I think we're fine. And when I say that the dollar could be hurt, on the list of things perhaps to be long is stocks. I do kind of think there's going to be one big plunge at some point in time in 2024 that's going to push the Fed actually to ease. But I think I don't hate stocks for 2024.
Yeah, nor do I. Next time the rundown includes crude oil, I got some interesting tidbits on that. I'm about to enter a short position, but I'm waiting for the right spot for that to be. Speaking of trends, this is the rundown, and this is Bob Iacchino, Jim Iorio. Again, the Traders Edge Show, 4 p.m. live. Join us this week. Bob Stein, Deputy Chief Economist for First Trust Advisors. If you don't catch us live, catch the replay, and we'll see you next time.